Good morning, traders. Monday, the 5th of November, and I'm going to take you through this week's breakdown. So, obviously, last week we had NFP on Friday, where US employment did increase more than expected. Unemployment remained the same, and earnings were down from previous, but were largely as expected. So not too much volatility caused by last week's announcement, because it was largely as expected, and it appears as though the markets are just waiting to see what comes from the trade discussions between the US and China as an overall determinant of the direction that the US dollar will be taking. So as always, let's get started on Aussie dollar. So here on the weekly time frame, see that we have been bearish, as we all know, and I do believe that most of this bearish price action was in fact driven by the strength of the dollar and not actually poor economic factors in the Australian economy. However, last week we did find support off the 0.7050 level as expected, and we exploded through that exponential moving average all the way up to that 0.7250 major resistance level. After meeting that, coming just shy of the simple moving average, price did pull back slightly, but still closed above the exponential moving average. Now this week I am expecting price to continue bearish momentum off the back of that pullback, to retest this zone around the 0.7150 before then attempting this major level once more and pushing higher to 0.7300 and this 0.7350 region. On the daily time frame, you can see this pullback caused Friday to close as this spinning top candle with a long upside wick. So this would lead us to believe that we are heading downside. Whether it's just going to be a quick spike today and then pull back up, or whether we will see it more gradually over the course of this week. We do have to bear in mind that we've got the the Australian dollar rate decision tomorrow morning. Well, it's overnight, so about 4:30 a.m., which could move this market. It's more the rate statement that we'll be looking towards. The Australian dollar, the rate's largely expected to stay the same at 1.5%, has been for a number of months now. So it'll be looking towards the Royal Bank of Australia's rate statement, where they talk about future provisions for the economy. So anyway, as we were saying, expect this to come back down here to this 0.7150 region, in line with a test of moving average support, a retest of the broken downtrend, and also a retest of this broken range. Currently, I can't really see price heading much lower than that. However, if it does, we'll be looking at around 0.71 before again heading higher towards this 0.7300 level. I mean, we do have this overall trend line, this overall downtrend, and if we plot a Fibonacci on there, that would have us reversing from this refined region and heading towards 0.6970. However, I wouldn't like to accept that until we have seen how price responds around this trend line, as I am now looking at the long scenario. You can see that we hit this 0.750 level 1, 2, 3 times. It's just so many rejections from this level, and then price broke higher along with the moving average crossover. So that would lead us to believe that we are seeing a reversal. Onto the 8-hour time frame, you can see that following meeting that 0.7250 monthly resistance, price took out most of the gains from that prior candle, continued lower below the 0.7210 support zone, and the current candle and the last candle have been rejecting this zone. We are still above that exponential moving average. However, I am anticipating a break below that, a spike down towards this support level as mentioned on the higher time frames. Again, the last candle did break back above that exponential moving average, but failed to break into this resistance zone with any sort of conviction, and now we appear to be reversing from there. So overall we'll just have to wait and see, but I do anticipate the 0.7150 here. On top of the rate decision tomorrow morning, we do have to bear in mind that we have US midterm elections tomorrow as well. So while I believe that is largely priced into the market already, if there's a shock result, then it does have the potential to stir some things up. Onto USD JPY. Now, if you remember, we were talking about a break of this uptrend. However, last week, bullish momentum from this refined Fibonacci region pushed price back above the exponential moving average and back above last week and the prior week's highs. So we did close quite strong last week, as now we look to continue momentum up towards that 113.75. Last week's candle does give us confirmation that we formed a higher low here. So now we're looking to form a higher high, potentially in line with Fibonacci extension targets around the 115.70 and 116 region. And it does also essentially invalidate our downside scenario of a break from this trend line. So bear in mind the significance of this 113.75 level. As we approach it once more, you can see time and time again we've tapped that region and reversed. So if we do break that region, I do believe that we will push all the way up to 117. However, immediate targets are looking at that 113.75. If we take a look at how this looks on the daily, you can see that Friday, well, last week, at the end of last week, Thursday, Friday, we did come back down to retest those moving averages after breaking out from this consolidation here. Price rejected the moving averages, formed this bullish engulfing on Friday, back above the 113 support zone, and now we are heading higher towards that 113.75 1.1375 region. On the 8-hour time frame, see we haven't quite broken back above the previous high yet. After price came back down to retest this zone last week, we've begun to move bullish. Started up with bullish momentum. However, we're seeing slight hesitation here. For me, I expect to see potentially price drop down to retest this 113 support to then extend higher. And from this smaller Fibonacci retracement tool, you can see that this prior low, the retest of the range, was in line with the 50% retracement. And look at how that extension target lines up with that 113.75 weekly level. So we can still look to that level as our overall targets, but first I expect that price can pull back slightly. Whether we find support on this moving average or whether we're able to push through slightly further to the 113 level is yet to be seen. However, I would like to see a break above 113.30 to confirm that we are going higher. Otherwise, we do have what is essentially a double top formation here. So now onto USD CAD, and to be honest with you, this has not been my best friend recently. I have been doing my analysis on it, however it has been a little bit all over the place for me. As you can see, a bit of choppy price action. We are trending upwards overall in this channel. However, for the past few months we have been in this range. Moving averages have flattened out. The past 2 weeks we've seen further indecision, spinning top and a doji candlestick, and although we do have this downtrend, this shorter term downtrend, we are still above the moving averages, which are converging potentially for a crossover. So I do believe that we do have the potential to come back down to the 1.3 major support zone. It's also a major psychological level. However, there is still that possibility of coming back up to test the 1.32. Now oil, last week the price of oil did tank. Oil is struggling somewhat with the US placing sanctions on Iran. However, at the same time, the US strength could be stalling slightly. So lower oil prices would see this pair heading higher. However, for now, I do anticipate that we may see a pullback. As you can see highlighted here, we fell out of this range with this new low formed at the start of October, and then this high here could be considered a new lower high to the September highs. We'd need to see bearish pressure back through the moving averages to confirm this as a high, though, as we then look to form a new low around a test of this uptrend. On the daily time frame, you can see that price is rejecting this daily uptrend here. It is quite steep. The most recent low was a rejection from that uptrend, in line with a rejection from this 1.30 60 support zone, as well as the simple moving average. However, you can see that price failed to close back above that exponential moving average. The bearish engulfing close on Thursday with Thursday's candlestick does show us that we are looking bearish overall. After all of this bullish momentum, this strong bearish candle does look like the market is turning slightly. So with today's candle, as we're currently looking to break above, we're currently testing that exponential moving average, then we could pull back for a break of this trend line to head lower. Initially, we'll hit that 0.3060 region once more before potentially testing that 1.3 psychological level. Now with that could lead to a moving average crossover to the downside, in which case we could potentially be seeing another move towards the downside. However, we will have to wait and see. Like I did say, we do have the potential to push back higher to make another test of the 1.3165 daily level. However, we'll have to wait and see for that, see how price responds to this exponential moving average right here. If we look at drawing a fib on here, take that high down to potentially this low, you can see that price did breach the 78.6% retracement level, but was quickly whipped back below that. So this may have been just some slight manipulation beyond that level to look as though we're going higher before price was quickly whipped down lower. As I say, if we remain below this moving average, then we could be looking to head lower. And if we take actually this as the level, I've said in the past about the gaps down, don't really like the gaps down in the market. They can become quite difficult to trade, but that looks as though price is responding to that 78.6 level quite nicely, ready for a reversal. So down to the 8-hour time frame, and the moving averages have actually crossed over here after finding support on the 1.3060, came back up to retest this level. We failed to break back above the 1.3115, and now we may be looking to turn back down to tap that region again, potentially head past previous lows at this 1.3 major support level. Past here, we are looking at 1.2900. So as you can see, we've got this high here, lower low. We could potentially be forming a lower high, but you can see how price is indecisive in the market, trapped between the two moving averages, which are largely flat. The last H4 candle closed bearish, but resting still on that exponential moving average. So a break either way could see a continuation. Upside, I'd like to see a break above the 1.3115 to head towards that 1.3165 initially. Downside, we do really want to break below this exponential moving average to continue the move back past the 1.3060. So a bearish close below this moving average would give us that confirmation, potentially a close down towards today's open around the 1.3090 to head lower. Now finally, we've got GBP USD. And interestingly, after all of that bearish momentum that we saw last week, we pulled back after failing to breach the yearly lows for this pair. We didn't quite meet that low, and this could potentially be seen as a double bottom formation, although it is 30 pips or so higher than that last low. Nonetheless, following this, so we failed to break past the 1.2750, pulled back from that level all the way back up to the 1.3 major key level, tested the moving averages as resistance and pulled back. We are still bullish here, and you can see over the weekend we did have a continuation of this bullish sentiment, gapping up with the open at the start of this week right into this moving average zone here, and also back above the 1.3 major resistance, which is now turned to support. So if we do break above these moving averages, we will be looking at 1.32 and 1.3250 with a continuation of the bullish momentum. However, with continued uncertainty, we may see a break back below this region, which could take us back down towards the 1.2750 weekly support level. Daily time frame. Here you can see that massive bullish candle that we had on the first day of this month. Took us all the way back up to the simple moving average, but failed to break through the 1.3. The following candle on Friday did give us some pullback. We did see a bit of profit taking on Friday as we were heading towards that 1.2925 support zone. Today is already attempted to continue bearish following the gap up. However, we appear to be rejecting that move currently as we look to head towards that 1.3100. Initially, I had anticipated that we would continue higher, tap that level before retesting the 1.3 level. However, now we are looking to head straight towards that level. And although GBP services came out weaker this morning for the second month in a row, showing the underlying effects that Brexit is having on the UK economy, this pair is still pushing higher. As you can see, we did have this low here, which formed a lower low to here, back in the start of October. We've had a lower high, so we may be forming a lower high once more here to continue again back down to 1.2845 before 1.2750 once more. If you remember, I did just say about the double bottom, which could leave us heading back towards the 1.3250 level, but have to wait for reversals. As I said last week, any region between this 1.3 to 1.3100. Overall, I do like the look of shorts here. I do like the look of downsides. However, we do need that confirmation. As you can see, moving averages crossed back over here on the 8-hour time frame. We are stalling somewhat, a little bit of consolidation around this 1.3 monthly level. So until we do break comfortably above this region, I won't want to be accepting the long scenario, and we'll still be looking at pulling back down towards this 1.2925, We will have to see how price responds around this exponential moving average, as it could support price. If we get a Fibonacci tool on here, we can see that price has just about tapped that refined region, the 61.8% level, and so could be pulling back down. That would leave our downside targets all the way at 1.2540, and if you have been following my analysis, I have said long term there is the potential to head all the way down to that 1.2500 level. So again, seeing how price responds to this refined region, 1.3100 sits right within that, but similarly 1.3070 could be a region that we reverse from. We'd first have to see price break above this level right here at 1.3025 or 30, which the current candle is pulling back from. So we could be seeing a bearish close here, back below 1.3 psychological level to turn downside. You can see the moving average pulled up as momentum increased, but has now begun to taper off and flatten slightly, as we may be seeing it turn down, ready to cross over back to the downside. So hope that makes sense to you guys, and I'll be back with a midweek breakdown on Wednesday or Thursday. Have a great week, guys.